waiting to buy a home because you think mortgage rates will drop significantly, you might want to reconsider. While experts do predict rates will decline, they may not fall as much as buyers are hoping for. So what's that mean for you? Well, let's break it down. A few months ago, projections suggested mortgage rates could dip below 6% by the end of the year. But according to the latest data from Fannie Mae, the Mortgage Bankers Association, and Wells Fargo, that may not happen. Instead, rates are now expected to stabilize closer to 6.5% by the end of the year. Thanks to Keeping Current Matters for highlighting this data. So if you've been waiting for rates to drop significantly before buying a home, you could be waiting a long time. And if you need to move due to a job change, growing family, relocation, waiting might not be an option. So here's something else to consider. Home prices have surged 60% in the last 5 years. So that means many homeowners are sitting on a lot more equity than they realize. If you're on the fence about selling, seeing these numbers might make you realize a move is more within reach than you thought. Whether you're looking to downsize, upgrade, relocate, this could be the opportunity to take advantage of your home's increased value. If rates aren't dropping as much as you'd like, there are still ways to make home ownership more affordable. So here are 4 financing strategies to consider. The first one will be mortgage buydowns. This allows you to pay an upfront fee to temporarily lower your mortgage rate. It can be especially helpful in reducing your monthly payment early on. Right now, 20% of agents say first-time home buyers are using buydowns to help them afford a home. Second, adjustable rate mortgages or ARMs. ARMs typically start with a lower interest rate than a traditional 30-year fixed loan, making them a good option if you plan to refinance later or expect rates to drop in the future. And unlike the risky ARMs of the early 2000s, today's ARMs require buyers to prove they can afford the loan even if the rate adjusts higher. Third is an assumable mortgage. Some buyers can take over a seller's existing mortgage, including their lower interest rate. With more than 11 million homes qualifying for this option, it's worth exploring if you want to secure a better rate. And fourth is down payment assistance and grants. Depending on your situation, there may be state or local programs offering assistance with your down payment or closing costs. A good lender can help you find and apply for these opportunities. Speaking of good lenders, the best way to find out what option works for you is talk to Dave Craig, our in-house mortgage lender. He can help you explore financing strategies, best deals based on your situation. Whether you're looking at buydowns, ARMs, or other creative finance solutions, Dave has the experience to guide you through it. And while mortgage rates may decline slightly, waiting for a significant drop might not be the best strategy. Instead, like we said, options like buydowns, ARMs, assumable mortgages, or down payment assistance could make homeownership more affordable right now. And for homeowners, this market might be a great opportunity to cash in on your home's increased value. If you've been thinking of selling, let's connect, take a look at your equity, and you might be in a stronger position than you realize. Curious about how the market is performing in our area? The latest stats are below.